Hello, welcome back to our IGCSE Accounting February-March 2025 MCQ session. We have already completed questions 1 to 20, and today we are going to discuss in detail the remaining questions from 21 to 35. I have received a very positive response from our students, and that has motivated me to continue making more classes for you. So let's begin with the question number 21. What is the disadvantages of running a business as a sole trader? Yeah, option A, the owner does not have to pay interest on drawings. Option B, the owner is entitled to all the profits made by the business. Option C, the owner must share the decision making and the profits. And option D, the owner's personal possessions are at risk if the business should fail. Okay, let's analyze the options. The owner does not have to pay interest on drawings, and the owner is entitled to all the profits made by the business. Option A and B are advantages. So the reason here, no interest on drawings and keeping all the profits. The owner is entitled to all the profits made. So this is the advantages of sole trader. So option A, B is incorrect. Then let's see option C. The owner must share the decision making. Owner will not share the decision making. So C is incorrect because sole trader do not share the profits or decisions. They run business alone, right? So let's move to option D. The owner personal possessions or risk. So here the main disadvantage is unlimited liability, right? The owner's personal assets like house, car, savings can be used to the settle business debts. So answer will be D. Okay, so let's move to the question number 22. What is shown in capital and liability sections of a statement of financial position of the business? So here option A, how the resources are being used by the business. B, the working capital of the business. And option C, total amounts owed by the business and total amounts owed to the business. And option D, where the resources of the business have come from. Okay, this is very easiest question what I noticed here. Here, capital and liabilities, everyone know. Explanation here. The capital and liability section of a statement of financial position, it shows the sources of funds for the business. Okay, here capital represents the owner investment in the business. Liability represent the amount owed to the external parties like trade payables. Okay, here option A, how the resources are being used by the business. This is asset. The working capital of the business means working capital, current asset minus current liability. Option C, the total amounts owed by the business means this liability, total amount owed to the business means its asset. So here question, what is shown in the capital and liability sections of the statement of financial position of the business? Where the resources of the business have come from? This will be the correct answer. Option A, asset section. Option B, working capital. Then option C represents liabilities and asset. And the answer will be where the resources of the business come from. Okay, so answer is D. Let's move to the question number 23. Anne and Ben are partnership sharing the profit and losses equally. They provided the following information for the year ended. So already they given profit for the year, interest on capital, both partner Anne and Ben. and drawings 8,000 and 7,000. And what was the Ben residual profit? Okay, before doing the partnership question, you have to aware of profit and loss appropriation account format. Okay, so first will be profit for the year. See, I have already made the workings for you guys. Step one, net profit. Net profit how much? 20,000. Step two is interest on drawings. Yeah, drawings only they mention there is no interest. Most 90% student they are making mistake here. The reason just they mention drawings that doesn't means it's interest on drawings. So interest on drawings is nil. Then profit will be 20,000. The next step is interest on capital you have to minus. So interest on capital is here 5,000 and 4,000 separately you have to write 5,000 4,000 both add it it's 9,000 20,000 minus 9,000 it's 11,000. So in this question there is no salary. If partner's salary is mentioned you have to minus then you will get the residual profit. So residual profit is here 11,000. The next step 3 is how much is the share of profit. See they already mentioned here profit and losses equally. Equally means 1:1. So 11,000 times 1 divided by 2. So each partner will get 5,500, 5,500. Now the question here, what was the Ben share of residual profit is? Option A, 5,500 because Ben the share of profit is 5,500. Okay. So let's move to the question number 24. Frankie is a partner. He has both capital account and current account. Which statement is correct? Option A, any loans he makes to the partnership are added to his capital account balance. Option B, he can have a debit balance on his current account but not on his capital account. Then option C, interest on drawings would increase credit balance on his current account. Option D, the balances on his capital account falls when his drawings exceed his share of profit. Okay, let's analyze this question. Here, Frankie is a partner. He has both capital account and current account. Okay, before doing this question, you have to aware of the what is capital account, the format you have to study. Then current account, the format you have to study. Then only you can answer this question. Okay, here option A they said any loans he makes to the partnership. Any loans he makes the partnership, we have to do separate loan account. Okay, added to the capital account balance, it's incorrect. Okay, then option B, he can have a debit balance on his current account, but not on his capital account. Yeah, this is correct because current account opening balance sometime will be debit side and sometime will be credit side based on the questions. And here interest on drawings would increase a credit balance. So interest on drawings normally it will come debit side. I will show you the format how it will be. Interest on drawings should be debit side, not a credit side. So this answer also incorrect. Interest on drawings would increase credit balance on his current account. The current account interest on drawings should be debit side. Okay. So the balance on his capital account falls when drawings exceeded his share of profit. So this is also incorrect. Yeah. Here I already given the answer. Let's discuss that one. Answer is B. Reason partner's current account. Yeah, I told you right. Debit or credit balance, but capital is permanent in the credit balance. The answer is B. Then why the answers are wrong? A, B, A, C, and D. Okay. Option A, loans are recorded in separate partner's loan account. It's a liability, not in the capital account. Then option C, interest on drawings is charged to the partner. It reduces their claim, so it would decrease our credit balance. It's debit to the current account. Then Option D, drawings and profits go to the current account, not the capital account, under the fixed capital method. That's why the option B is the right answer. Okay, here the format here. See, they're talking about opening balance, right? See, partner's current account, opening balance, sometime will be debited or sometime will be credit side. Then interest on drawings, see here, debit side, and interest on capital, salary, and share of profit is credit side. Okay, so you have to aware of this current account format, then only you can answer this type of question. So let's move to the question number 25. What is included in the equity of a limited company? Yeah, so limited company format you have to practice. Let's see. Debentures. Debenture is non-current liability. General reserve, yes, we have to take general reserve. See here I have already given the extract format of limited company. Equity and liability section, have you seen this? Ordinary share capital is there? Yes, it's there. General reserve, yes, it's there. Retained earnings. Retained earnings option is not given. Okay. So general reserve and ordinary share capital is there. Goodwill is non-current asset, intangible non-current asset. So debenture and goodwill we have to exclude. The answer 2 and 4. Okay, so this is the extract statement of financial position limited company. Next, 26th. What is shown in the receipts and payments account of a club? Okay, music club, right? So club account, everyone know about the trading business and non-trading organization. Trading business, receipts and payments means our cash book, but club account, it's receipts and payments account. Okay, so let's see. Receipts and payments account is a summary of the cash book which is prepared annually. Okay, this is the very important, the meaning of receipts and payments. Let's analyze option A, B, C, and D. Summary of all cash and bank balances. Yes, here it's the answer. Receipts and payments account of a music club, summary of all cash and bank transaction. Then B, depreciation of musical instrument. Okay, here I have already given some notes related to receipts and payments account difference and income and expenditure. Here, receipts and payments account, there is no adjustment or made for accruals and prepayments, and non-monetary items such as depreciation are not included. So this is wrong. Then subscription received and accrued. Subscription and received is subscription account. Subscription received and accrued everything would be in the subscription account. Then the club surplus and deficit normally income and expenditure account. So the answer already I told you, right? That's A, summary of cash and bank transactions. Then here income and expenditure account. Adjustment are made for accruals and prepayments we can do in the income and expenditure account, and non-monetary items such as depreciation we will record. In non-trading organization, income and expenditure means income statement. Okay. Then here in receipts and payments account includes both capital and revenue items, and income and expenditure account includes only revenue items. Got it? Yeah, let's move to the question number 27. Medway Social Club runs a cafe for its members for the year ended 31st December. The sales were 15,000 and cost of goods was sold 12,000. The closing inventory of coffee had been included in the cost value 1,000 but had deteriorated and was worth 500. What was profit on the cafe should be transferred to the income and expenditure account. Yeah, so this is non-trading organization cafe refreshment account. Okay, so I have already made the workings for you. First one is sales. What is the sales here? 15,000. Record 15,000 first. Then less cost of goods sold, 12,000. If you minus, the gross profit will be 3,000. Then we can check the adjustment. Closing inventory 1,000. Closing inventory of coffee had been included a cost value 1,000 but deteriorated as worth 500. This is the adjustment. Okay, if deteriorate inventory we can't sell, right? So we have to minus it. Loss due to the inventory deteriorated 500. 1,000 minus 500. So that 500 you have to minus from the gross profit. Adjusted profit, this is the amount we have to transfer to income and expenditure, 2,500. Got it? Yeah, question number 28. Which statement about work in progress is correct? Option A, it consists of completed and partly completed goods. Option B, it is adjusted for when calculating the prime cost. Option C, it included as inventory in the statement of financial position. And option D, it is included in the manufacturing account and income statement. Before that, what is meaning of work in progress? Work in progress is it is the goods which are partly completed at the end of financial year. Okay, so it's in the manufacturing account. Okay, let's analyze each option. First one, it consists of completed and partly completed goods. Option A is wrong one because work in progress consists of partly completed goods only, not completed goods. Consist of partly completed goods only, not completed goods. So it's incorrect. Option B, it is adjusted for when calculating the prime cost. Prime cost includes direct material, direct labor, direct expenses. Work in progress is not adjusted for the prime cost. Then option C, it is included as inventory. Yes, work in progress shown as a part of inventory alongside raw materials and finished goods in the statement of financial position. Then it is included the manufacturing account, yeah, and income statement. It's wrong. So work in progress adjusted in the manufacturing account but not directly in the income statement. Okay, got it? Option C is the right one. So let's move to the question number 29. A manufacturer calculate the cost of production for the year at 57,000. It was found that lighting and heating $2,000 had been omitted from the financial statement. Then 75% of lighting and heating is allocated to the factory and 25% lighting and heating is allocated to the office. What was the cost of production? Okay, here I have already made the workings for you. Step 1, manufacturer calculate the cost of production 57,000. So 57,000 we have to record first one, cost of production 57,000. Then step 2, we have to check the adjustment. Here 75% of lighting and heating is allocated to the factory and 25% lighting is allocated to the office. Here $2,000 of heating and lighting had been omitted. So this one we have to add it, right? This omission we have to add it. Okay. So the calculation will be 2075% is 1500. So 1500 we have to write under factory overhead. Okay. Then remaining this 25% where we are supposed to write this is income statement because office related things we will not record in the manufacturing account. So 75% only we have to take. So 75% of light and heat is 1500. Then we have to add it 57,000 plus 1500 because omitted, right? So the answer 58,500, option D. Okay, so let's move to the question number 30. Farad did not keep whole set of accounting records. He purchased goods on credit terms and all sales were made on cash basis. Farad compared his assets and liabilities at the start and at the end of financial year. He recorded the following changes at the end of year. So first one, an increase in non-current asset 11,000, decrease inventory 6100, then an increase in trade payable 3,000. The bank balance had changed from debit balance 4,200 to an overdraft of 7,100. What was the changes in Farad's capital? Option A, decrease of dollar 3,400, decrease of dollar 9,400, and option C, an increase of dollar 4,800, and option D, an increase of dollar 10,800. Okay, before doing this, this is incomplete records topic question, and the some calculation workings I wrote it here. Okay, I will explain. Yeah, mainly the changes in capital is calculated using this accounting equation. How we are going to calculate this? Changes in capital equals changes in assets minus changes in liabilities. That means capital equals assets minus liability, no? The same way, changes in assets minus changes in liabilities. Here, changes in capital equals decrease in assets minus increase in liability. This question, okay? So I will explain you how it's decreased, how it's increased. Okay, first non-current asset 11,000, right here 11,000. Then current assets. What is the current asset? Inventory 6,100 decreased. So you have to minus. Then very important item is bank balance. Bank balance had changed from a debit balance 4,200 to overdraft 7,100. So 7,100 plus 4,200 both we have to add totally minus negative balance. Okay, 11,300 decreased in bank balance. Okay, so what is the asset? Asset now decrease it, right? Minus 6,400. Reason, our asset, non-current asset only 11,000. Then inventories decreased and bank balance also, decreased. Totally negative balance 6,400 is decreased. Then current liability, here 3,000. So liability increased, so we have to minus it. That means totally 6,400 minus 6,400 and minus 3,000, totally minus 9,400, negative figure, decreased. Net changes in the capital 9,400 is the right answer. And here, one more explanation. Bank balance calculation. The bank asset has gone from a positive balance 4,200 to a negative balance overdraft of how much? 7,100. This is a net decrease in the asset position. Reason, the calculation I used determine net changes in the business asset over the period. The total decrease in asset position equals amount of asset loss plus amount of new liability. That's why we are adding. Okay, how much loss happened? How much new liabilities increase? That's why we are adding 4,200 plus 7,100. Okay, understood? The answer will be decrease of 9,400. Yeah. Then we are moving to the question number 31. Our business provided the following information. Revenue 100,000, gross profit $20,000. What was the percentage of markup? 20%, 25, 75 and 80. So before that, you have to aware of what is markup formula. Okay. Markup formula is gross profit divided by cost of sales times 100. Margin formula is gross profit divided by sales times 100. So step 1, we have to follow this one, markup, right? So markup we have gross profit we have, but cost of sales we have to find out. How to find out cost of sales? Revenue minus gross profit, you will get it. So 100,000 minus 20,000, the answer cost of sales is 80,000. Then we can apply this formula. So yeah, gross profit 20,000 and cost of sales 80 times 100, 25% will be the answer. 25%, option B is the right one. Okay. We are moving to the question number 32. Why might a trader wish to increase his trade payable turnover days? Yeah, trade payable turnover equation is trade payable divided by credit purchase times 365 days. Okay. Then option 1, to improve his total working capital, to to keep funds available for other purposes. Option 3, to receive more cash discount. Which option is right one? Okay, here each option I already made the explanation. To improve his working capital. To improve his working capital is incorrect. Reason: increasing payable days generally reduces the need for immediate cash, but it doesn't improve total working capital because current asset minus current liabilities. No, in fact, it increases current liability, which reduces the working capital figure. So this answer one is incorrect. Second one, to keep funds available for other purposes, it's correct. Reason: by delaying payment to the supplier, the trader keeps their own cash for longer period. This cash can be used for other investment, to pay immediate expenses, or to cover unexpected needs, which is a form of pre-financing. Okay, so this answer is the right one. Then third one, to receive more cash discount. This one, to receive more cash discount. This is incorrect. Reason: cash discounts are typically offered for early payment. Increasing the payable turnover days means paying later, which could cause the trader forfeit the cash discount. That's why this is also incorrect. Then option 2. That means option C is correct answer. Okay. To keep funds available for other purposes. That's why my trader wish to increase trade payable turnover days, to keep funds available for other purposes. Okay. So let's move to the question number 33. Uzoma provided the following information about his first year of trading. Sales 46,000, gross profit 21,850, advertising 2,700, other expenses 11,350, profit for the year 7,800. Uzoma wants to improve our profit in the future, is considering four options. Which option would provide the biggest increase in our profit for the year? Okay, so it's related to again income statement. Okay, let's see option A, earning commission, which would increase profit for the year 20%, increasing advertising 1,000, which would increase gross profit by 2,500, increasing sales price, which would increase gross profit by $2,000. Then option D, reducing other expenses by 1,500 and earning commission of $1,000. So I have already made some workings for you to understand. Option A, increase profit by 20%, right? They said increase profit by the 20%. That time your profit is profit for the year 7,800. No, 7,800 20% means 1,560. So what is your new profit? 9,360. Okay, 9,360. Your question: which option would provide the biggest increase profit for the year? Okay, let's see. Then option B, sorry, increasing advertising by 1,000. Increase gross increasing gross profit by 2,500. Yeah, here they said increasing advertising by 1,000, which increase gross profit by 2,000. So increase gross profit 2000 and increase expenses advertising 1000. What will happen net? Net increase is 2500 minus 1000, 1500. So new profit will be 7800 and plus 1500. In that case, 9300 only new profit will generate. Then option C, increase gross profit by 2000. Is it correct? Yes. Increase 2000. No change to expenses. Okay. Sorry. Increase gross profit by 2000. No change to expenses. So 7800 plus 2000, 9800. Then option D, reducing other expenses by 1000 and earning commission is $1000. So reduce expenses by 1000 and increase income commission by 1000. What is the difference? Net increase is because expenses reducing time, automatically income will increase, no? 1500. Then again you are getting the commission, so totally 2500 you are getting it. So 7800 plus 2500, 10800 is the correct answer. Yeah, let's move to the question number 34. Sally's business has reached its bank overdraft limit 1500. Sally is considering following actions. Option 1, asking the bank to increase the bank overdraft limit 2000. Option 2, borrowing $2000 from a relative and paying the money back in 6 months. Option 3, obtaining a loan of $2000 from the bank repayable in 2 years. Option 4, paying $2000 from Sally's personal bank account into the business bank account. Which action will improve the working capital of the business? Option 1 and 2, option 1 and 4, option 2 and 3, and option 3 and 4. Okay, let's analyze this question. Here, asking the bank to increase the overdraft limit, the classification overdraft is a current liability. What is the effect? No financial transactions occurs. It only increases the limit. No immediate changes in the working capital. Okay. So option 1, no. Then option 2, borrowings of $2000 from your relatives and repayable in 6 months. That time the loan is repayable in less than a 6 month, right? Making a current liability. So current asset will increase by 2000 and current liability increases by 2000. No changes. Okay, no changes. Then option 3, obtaining loan 2000 from the bank repayable in 2 years. Obtaining loan 2000 from the bank repayable in 2 years. The loan is repayable in 2 years, making non-current liability. Current asset will increase 2000, right? So there is an improvement. Yeah. Current asset is increasing. Yeah. Current liability, no changes. Yes, this is correct. Option 3 is agreed. Option 3 is correct. Option 4, paying $2000 from personal account into business bank account. This is additional capital, right? Yeah, the owner personal money is giving to the business. Okay, so current asset increases by 2000. There is no immediate change to current liability. Again, here also there is improvement. 2000 current asset, there is no current liability effect. Option 4 also is best option. 3 and 4 is right answer. 3 and 4. Yeah, we are in the last question is, when does a business recognize income from sale of goods on credit? Okay, here are the options. Option A, when a check is received from the customer in payment for the goods. Option B, when a check received is paid into the business bank account. Option C, when the goods are delivered to the customer. And option D, when the goods are ordered by the customer. So here, detailed explanation. The correct answer is When the goods deliver to the customer, when the goods are delivered to the customer. This is the right one. Okay, reason. This follows the accrual basis. Okay, accrual basis of accounting rules and the revenue recognitions of principal. Revenue is recognized when it is earned, not necessarily when cash is received. In a sale of goods, revenue is considered earned when the seller has fulfilled their performance obligation, which is typically when legal title and possession of the goods are transferred to the customer, when the goods are delivered. This is the rules, accrual concept. Option A and B describe the point of cash receipts, which is relevant for revenue recognitions on a credit sale. Then option D, it's too early in the process because when the goods are ordered by the customer, so it's incorrect. Okay, so the answer is C. Okay, so I hope everyone understood uh, this question paper, February March 2025, multiple choice question paper. Thank you for your feedback. Going forward, I will upload more videos related to the uh, 0452 syllabus as well as edXL also I'm planning to do for A level students. Thank you for your support.